Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So markets gapped up. In the first half hour, sellers came in. They tried to drive things a little bit lower, kind of like what happened on Friday. Things did come a little bit lower. Some guys made a little bit of money shorting versus the first 15-minute high or maybe even the 30-minute high. But then, after I think about 45 minutes to an hour, there wasn't that much downside selling pressure. Things reversed up. You could have then been a buyer versus, that low, and then things wound up closing, or the S&Ps closed near the highs of the day. And lo and behold, here we are. Since Thursday at 2:30, SPYs went from 181 to 189.75 very fast in a way that nobody believed. Nobody believed the article. Even though we bounced hard off 1812, no one, wanted to be long over the weekend because what they could do with the yuan and, with China possibly imploding, but meanwhile it's the exact opposite. And then here we are 3 days later, and we're trying to figure out, will this last longer and continue, or, was that it? Now that, sentiment starts to change a little bit. So let's just take a look at the charts. Remember last year, broken sectors do rally once they reclaim their 8 and 21 day, and this was last year. This was your, August low, your October double bottom, okay, which no one believed either. And I think most people got blown out of the water shorting this entire rally. Okay, so at this point, what happened here, what you want to notice is that we were above the 8 and 21 day the entire time. Took out a lower pivot, reclaimed the 8 and the 21 day moving average. The low here was 1954 was when it reclaimed it. You didn't have to buy the red dog reversal low. You didn't have to take it above this pivot. You could have got involved somewhere in here, or maybe even when it consolidated to perhaps take out the prior resistance, for that move back up to, what was that, 2114. So you're talking, there was another, 100 handles besides the low. So the last thing you want to do is revenge a move. And I'm not saying this is the type of move that's going to happen just like that. But if you look here, okay, let's just look here, on its own merits. You have, that first red dog reversal low here. What happened? Went back to resistance. Didn't quite push through and fail like you did here, okay, but, a little bit less dramatic. Came back in. You had that Wednesday low. Wasn't a red dog reversal. Wasn't a higher low. It actually was a retest of the 1812. And now it seems as if this pivot was just taken out, kind of the same way this pivot was taken out. This took back the 8 day. This took back the 8 day, but we're still below the 21 day, and we're still below this prior area. So the question is, what do we do here? What's next? So, I'm not saying you need to be, all in long, definitely not. But if you start shorting it, or you didn't cover here and you start too early, you're not going to make it. Chances are, we'll see what happens tomorrow, but, your next resistance is really now this little, pivot right here, which is about 1913, and then the prior highs. The oscillator went out at plus 35, making it hard to, not hard to be long because you're not oversold anymore, but, it could be plus 50 before, it stops and before you get a signal. Right now you're not getting a signal, to be short. Like this day you had a signal when it pushed through and failed. Here you didn't even get much of a signal except for it opened and then it took out, the low here. So unless you're, forecasting that we can't go higher because you have an opinion, I would, kind of keep it to yourself, because a lot of guys last year, got blown out of the water, during this very tradable rally back to highs before, it finally created a new wedge, and broke below it to start the year. So let's pick it down one more step. So let's talk about the micro. You look at the spiders. You now had two gap ups. Okay, this one held very nicely, and then this one actually held very nicely. How could you have maneuvered it today? I talk about a 15, 30, 60-minute low. Let's take a look at the 5 minutes so you can see what I'm talking about. You look at the 5 minute here, you'll see that you did have a gap up. It made a high real quickly at 189.02. You could have shorted right around here, when it broke this little consolidation versus the high. And not saying it was a blockbuster trade, but, from 180, the low here is like 188.43. Your first move was down to 187.84, which is about 60 cents. Came back up, retested this spot, and made a new low down to 187.63. So if you kind of shorted right around here, or maybe you were a little cuter, you had 50-cent risk, you made $1 or so. Then if you said, okay, I don't see things going down, oil's lower, I don't, banks are strong, some tech is strong, et cetera, you might have maybe not bought this low, but then when this little descending channel got broken, okay, a high, lower high, this could have been either your spot to be long or wait for it to go sideways and then right here. Okay, and then that's when you could have bought versus the low instead of short versus the high, and it could have been tier 1 here, and then it could have been maybe even tier 2 when it took out the high, which if you come across like this, that comes in right around there, and then made a high almost to 190, and then did a whole lot of nothing. So that's how you could have traded this range just in the spiders, for instance. Okay, just to give you an example, if you didn't go out long or short, you needed to figure out how to actively rub some coins together and make some shekels and and create cash flow for the day without a lot of risk. That was one of them. A lot of people were pointing to Facebook, and Facebook was something that I shorted, and it went red. I got out of it and could have made a lot more, and then everyone was shorting everything else because Facebook was red, but nothing else really came in. We'll see what happens there. Look at Facebook. Facebook, gave you this gap up. This was your high. So once that high was put in and it came and made a lower high, this could have been your spot to short. It also showed a little bit of a divergence. So tier 1 short there. And then your tier 2 short could have been when it took out the morning low. And then you had a basic waterfall all the way down. So that was a nice relative weakness type of play for cash flow if you took it. On the VTF, I think I was short somewhere around here, and I covered somewhere into here. And obviously it would have been better to be short the whole way. So we'll see. I'm not sure why it was short, why it was weak today, but all in all, this is creating some kind of bearish flag, but we'll see how that works out. You had your doji top here that was saying, maybe we pull in, and boy did it pull in, and now saying, maybe it's too high of a PE and they think it could be a LinkedIn at some point. I don't know. You look at even like Amazon. Amazon really for a 5 billion share buyback, not really exerting so much power down here. It's like grinding its way back to the 200-day. So maybe by the time the market wants to turn, you'll see this give you a topping tail and you could reshort it. Google also, not really, having a crazy bounce back, more of just a controlled, people don't want to be short, no one's making big bets bounce back, but maybe tomorrow we'll see if it takes out this pivot. This pivot's like 725-ish. And then you have Netflix. Netflix also has this lower pivot, pretty lethargic down here, not doing a heck of a lot. Maybe there's a trade to get above this bearish flag to hit the 21-day, maybe not. We like when these momentum names are leading the market, not lagging the market. And as of right now, most of those are not above their 21-day, whereas you have, just say the Qs, what are you doing? Qs are just about there. So not really. And so this will be a spot that'll be interesting tomorrow. The IWMs were stronger than the tape today. Played a little bounce catch up, but it too, not at the 21-day yet. Here's your 3-day move. So you'll see what happens into here tomorrow. So I guess the traders would probably want a little bit of a gap up tomorrow because it'll be day 4, and day 4, maybe they have a little bit more confidence to fade and then it goes sideways. The probably best move would be to be down 7-8 handles in the market in the S&P, and then kind of hold this and go sideways and then break above this. So that would be the best bet. If you go back to the spiders, it'd be good to see, a little bit of a down open, a little bit of sideways, so then traders don't feel like they're chasing, and then you can get a better up move. Apple, I actually haven't been in Apple in a while, and it still doesn't look great, but I bought it as it cleared this spot, and I still have some overnight. I also have a little Netflix overnight. It's already at the 21 days, so maybe there's a trade to fill this gap. It doesn't seem like it's going to be a blockbuster type move. I kind of move it down, but whatever, I won't move it down. But yeah, maybe they want some value here. Maybe that bond offering they did is so they could buy back more stock and they come out with some news. So I took a little bit, feeling somewhat safe. We'll see what happens. The people, it's cute the way what happened with gold, right? Gold, everybody got bullish. I think this is when Gartman started to say he loved gold, and then Mark Cuban came out on this day saying he loved gold, and now look where gold is. The herd is always wrong. But also, as a lesson here, look at the down move that gold has had. So if you were looking to play a counter trend move in gold, with my 8 and 21-day moving average rule, look what gold did here. It pretty much got above the 21-day. Come on, give me. Right around here, which is still 106, 106. You didn't have to find the bottom. You didn't have to be in all this noise. But when it took out 106 and held it, it stayed above the 8-day all the way to 120. So it shows you how you can even play a broken trend that stays above the 8 and 21-day until that changes. And now you just had your first move lower. You have a little bit of an island top here. So that's kind of telling you that if that doesn't get filled fast, maybe there is more room in equities. Who knows? I would think that there could be some kind of bounce attempt into this area, but then now the 21-day is moving up, and that would obviously be better. But by this point, people's teeth will be knocked out. TLTs, if on that whole craziness of the negative rates, when it felt like there was a panic buy, which we even talked about selling panic buys or selling strength with that. Here is when it broke out, followed the 8-day all the way up. Now this actually broke the 8-day. So if you sold that panic buy strength, I would think that maybe this week we can get a cute little bounce off this. I don't know if it really holds, but now 128.58. If you sold that, and you didn't buy too early, this could be a nice little area to buy, to put onto your radar for this week. Even if it's just a bounce to be sold, a trade is a trade. And then you go to the banks. JP Morgan, Jamie Dimon spurred the bank rally and got another day today. JP Morgan actually was your strongest bank again. And if you look here, JP Morgan is now above. Look at this gap. Look, I showed you an island top and gold. This is an island bottom. Gap down, gap up. Leave this guy stranded here, all the shorts and longs, and boom. And now we'll see, what happens here into the resistance from the beginning of the year. But it's above all the moving averages now, a little healthy. Nothing else is really doing that. Goldman Sachs, still lagging. Maybe it tries to get to the 21-day where JP's already above it. Morgan Stanley, that guy on TV, looked like he had a little bit of a breakdown, but this, has been absolutely battered and bruised from 42 down to the 20s. Maybe this sees a little bit more. So it seems like, again, everything might have a little bit more room to the 21-day. And then at the 21-day, if it gets rejected there, maybe you get a cute short, and then if it holds in there, perhaps it becomes a better buy for higher prices at some particular point. So people are trying to get me to say, do I think the lows of the year are in? Or do I think we break the lows? Or what's your new target now? At this point, I'm going to just try and trade it with knowing in the back of my mind that structurally we're technically broken somewhat. I think the economy is worse than it was, 6 months ago, where lots of economies are battered and bruised, and the negative rates thing and the whole strength we just saw in commodities, I don't think that goes away so quick. But we could be in a move that goes to 1920 to 1950, and maybe even a move that goes for an overthrow to 1970 to 1990. Okay, so I know my pain tolerance. I'm not going to start cost averaging into moves because I have an opinion that maybe the lows aren't in and we're going to break them, because that could happen, but maybe that happens in June when they say sell in May and go away, and we rally all through, the end of February and March, and I miss it because I'm thinking, when do I have to short this? When the market will probably tell us that. Same way the market said we retested 1812. You had a gap and go that held on Friday, and now you had a little bit of power today. So perhaps that leads to some continuation based on that. But I wouldn't go out chasing things, and I wouldn't just blindly short. So stick to the plan. There was a nice brushback pitch by the Bulls, and now the Bears can't be as crowded on the plate the way they were for most of 2016, and we'll just call it that. Have a great night. I'll see you tomorrow.